Okay, good morning, everybody. So yesterday we saw the plunge protection team come out, and I believe there's going to be another shot at that today. It's um, it's funny, when I first heard about the plunge protection team, I thought, oh, that's some kind of tinfoil hat, conspiracy theory. No way such a thing is true and real, and yet it absolutely is. Um, we started to sell off a little aggressively yesterday, and we had additional Fed speakers show up on the news shows. That's all it takes, right? When I was new, I couldn't quite figure out like how the government could manipulate the market, right? Like how much buying or selling they would have to do to move the market, because when you're new, you don't quite grasp that you can move the markets without ever having to buy or sell anything. All the Fed has to do is come out and talk, and they'll move that market, especially when that's what they want to do, is move that market. We've seen it when the S&P reached that benchmark, when it fell 20% off of the highs in 2022. It was a Friday afternoon, and a Fed speaker, I want to say it was Bosick, but I can't remember which Fed speaker, came out on Friday afternoon and just showed up on Fox Business and started talking. And the market rebounded off of the lows of that Friday and just absolutely ripped to the upside. Plunge protection team. So it is a real thing. And all it takes is for them to come out and talk about policy, easing, um, stability. If they want to cap enthusiasm, then they can come out talking hawkish and growling, and if they want to spike the market to the upside, they can come out sounding really dovish, and they can literally move that market. They don't have to go out and buy and sell a bunch of contracts and anything to make it move. So, just kind of keep that in mind. Today we have 3 Fed speakers suddenly on the docket. We didn't have those 3 yesterday, I believe. Maybe I'm misremembering, but I don't think so. So there are 3 of them. I'm only seeing 2 because this is an introduction. So, morning briefing, the way we generally approach it, we want to look at what happened in the overnight hours, take a look around the globe, and see, how did Asia do? How did they close? Were they even open? Because they have different holidays than we do. What economic events happened over in Asia? What sectors did good and which ones didn't? And then how did that affect Europe? Europe is still open. It's only lunchtime there, about 12:30. What are they doing? How are their stocks doing? Which sectors, which industries are strong? Because all of that is very likely going to bleed over into our own market. So that's how we want to kind of start our day, taking a look around the world and looking for anything that really stands out that could be a continuing situation. Like when that boat got stuck in the canal, that turned out to be a continuing situation. It started out kind of like, oh, hey, look, a boat got stuck, and then it just got worse and worse and worse. So, most of the time you're not going to find an event like that, which is good. We wouldn't want something like that every day. But we got to approach it, take a look around, see, hey, what's going on? What happened out there? Morning, LeBlanc. Hey, you're on the YouTube side, so let me know about, the audio, if we get all that crackling and nastiness that we had been getting. I think I got it cleared up. We've had 2 days that seemed reasonably decent, but you let me know, all right? I would appreciate it. And no, the Fed can't solve the problem, right? And that, I certainly don't want to imply that the Fed can come out and fix things, but they certainly can move the market for a day, 2 days, they can stabilize the market and stop it from falling, or they can come out and stop it from rising. Right? They come out really hawkish on TV, and that's all it takes for them to come out, start chipping their teeth, and they can stop that market dead in its tracks. Because the algos are designed to catch what they say and automatically trade. It's not like people are sitting around listening to them and deciding, I'm feeling warm and fuzzy. I think I'm going to go buy me something. Nah, that's not how it works. The algos are going to trade right into whatever those Fed speakers say, and all the Fed speakers have to do is show up. They just popped up on Fox News Friday afternoon when we hit that benchmark 20%, and that market stopped on a dime as soon as that man started talking and turned around and it went the other way. Why? PPT, Plunge Protection Team. They can be subtle, and they can massage the markets softly without really showing their hand, or they can just come right out with a hammer and smash the table. Either way. So I'm looking around this morning, not seeing anything that really stands out, which is not a surprise, right? Most mornings you're not going to find a ship stuck in a canal or some other event like that. But that's where we want to start. We take a look around. I tend to use Finance Juice because it does have those speakers. It's free. You don't need an account, but if you did get one, it would be free. Just give them your email, you sign up, and by having an account, you can actually filter this down. So this is an aggregate news service. It gets news from all over the place. But some of those places aren't necessarily places that I care to hear from, right? Like, I don't care to hear from MSNBC. I don't. I don't want to hear from Fox News. I don't want to hear from CNN Business. So I go in and I turn that stuff off. Right? And if you have a free account and you log in, you can do that. If you just show up and you don't log in, then you'd have to go in every single time you log onto or come onto the page and adjust it. I don't want to have to do that either. All right, so the volume is within our normal boundaries, not really extreme, not really super light. It's a little heavier than the last few days, but nothing extreme, right? We're not off the rails here. And that's kind of what we're looking for every day. It takes 2 seconds to look down at this thing and see, are we above that benchmark? Or, are we on the other side of that red line? If not, hey, no problem. Or if we come in and we find it really crazy light, sitting around 25, it's within normal boundaries. We're good. We just turn it off, right? And all we're doing is we're taking a look and making sure that there's nothing really extreme or crazy going on in the volumes. And it's a cumulative volume, so it just counts the volume that came in over, the last 15 minutes. And if it was negative volume, it subtracts. If it's positive volume, it adds. And it just keeps doing that all night, and then it stops at the bell. That's not one of my indicators, by the way. It's why I customized it, but it's a Thinkorswim indicator, so you should be able to find a version of that already on your platform. All right, we are inside day. We are sitting inside of yesterday's price action. It looked like we were going to get a failed flag play, and then we didn't. And then it looked like we were possibly going to get a nice head and shoulders or an inverted one, right? And we kind of got it, but it stalled out on us, right? When it comes to measuring patterns, Thinkorswim added a new tool called the quadrant lines. It's kind of nice. That way you don't have to hijack one of your regular Fibonacci's and adjust it. The quant line is great when you're measuring range, flags, head and shoulders, anything that we would normally recognize as a boundary or a box and be able to plot it out. I went ahead and tucked some Fibonacci levels into mine just so that I didn't have to snap the quadrant lines and then go back in and snap fib lines. So I tend to have mine all wrapped together nice and neat. A head and shoulders, you want to measure it from the neckline. And generally speaking, 50% of the move is target 1, and 100% of the move is target 2. It doesn't owe us 100% of the move, but you can often get that, right? It's a nice follow through. But more often than not, it's the first target we're headed for. And that's what we got. So the head and shoulders from yesterday is done. It happened while we were sleeping. So, that, bye-bye. We don't have that anymore. We're still kind of fiddling around with our own VWAP. We are above the Globex open, and we're underneath the daily pivot. So with us being inside day, what we want to focus on is, are we going to maintain inside that range, or are we going to leave the range? Now, there's a lot of indicators right now that says, we're kind of in this 50-50 situation. And with the Fed continuing to come out and try to stop the decline, a lot of our signals or our indicators they're not doing a really good job to help us look forward and say, is it a good environment to take a swing or not? There's a capital rotation that looks like it was starting the other day where we were coming off of energy. And generally that would mean, okay, well, if we're coming off of energy, we're going to rotate back into tech. And instead we came off of both tech and energy. So we rotated out of energy, but we didn't rotate into tech. Not quite sure what to do with that, right? We got to get more information. For the events on the day, we have the ADP. Now, a lot of times the ADP would be a serious catalyst. And then there's other times where we just shrug and say, yeah, those were right in line, is what we expected, no big deal. Just like yesterday with the JOLTS numbers. A lot of times, JOLTS don't mean nothing to anybody. It's like, whatever. And everybody just shrugs. And yet yesterday the JOLTS numbers were front and center, and everybody was talking about it, and it was a big deal. So at 8:15 this morning, be ready for the ADP. 8:15, 8:30, 9:45, 10, 10:30, and then 3 o'clock. Now, that's power hour anyways. I wouldn't normally be screwing around that much in that time frame. And the worst, yesterday is a perfect example of a change event coming in at 3 o'clock, right? And I was actually live streaming at 3 o'clock yesterday. And I had pointed out, hey, watch the clock. It's 3. The bonds are going to close. The dollar's going to close. And we often get this rally. And as I was saying that, it started to break to the upside. And it's like, okay, well, at least we're going to VWAP. Maybe we'll get through it, maybe not, but that's the target. And sure enough, like a magnet, it just went right to it. We didn't make it through it. It just kind of faded right back off again. But you never know when it's starting to break out, if it's going to make it through that VWAP or not. But the idea that we knew it was 3 o'clock. We literally watched it come into the 3 o'clock time frame, expecting if it's going to pop and break, this is going to be the time to do it. It's not like we know for sure that it's going to do that, right? Just like when we talk about reversals and we say when it's coming into yesterday's levels, if it's going to reverse, this is a really good time to do it. And then whether it does or not, we deal with that. But that is a reversal zone, And that is a place at 3 o'clock in the afternoon where you have the potential to make a move. Today, there will be additional economic data coming out at 3 o'clock that's going to make power hour just a little more violent than a normal power hour. So be ready for it, right? Not like it's a surprise. It's on the economic schedule for the day. All right, our base case theory today is that we are going to maintain the range, that we're going to hold the line, start to build a low, start to build a base. That's our dominant market theory for the morning. We're not very far away from the 10-week. And we're getting kind of to the edge of how far away from the 10-day the S&P likes to get before it takes a pause. Obviously, as you can see, it's made big moves before where it gets about 6% away from the 10-day moving average, but that's not the norm. That's an exception to the rule. More often than not, somewhere between 3 and 4%, it tends to pause, consolidate, build a base, flip over, go back the other direction. It doesn't have to turn and go back to the 10. All it has to do is quit moving and let the 10 catch up. Right? And so that would be a basing pattern where we spend 2 or 3 days and we let that 10 come up to us, or we turn around and go back towards it. Either one. Now, I built this indicator based solely on that logic. How far away are we from the 10, and when does this particular market make a turn? Right? Because Tesla would turn differently, X Steel would turn differently. Each market's got its own distance from 10 that becomes its average or its norm. For the S&P on the downside, between 3 and 4. And we're getting there. We're right in that spot. So we're going to be looking for today to be that the start of that consolidation. We're also still within the weekly expected move. This red and green line was plotted last Friday. They won't move. This is not a dynamic expected move. It's a static expected move. It is set in stone in Friday, and that's it. We don't move it. If we do break to the downside today, outside of yesterday's low, that's going to be one of our targets, 39.43. Price tends to close on that line way more than it statistically should. Case in point, right there. Out of all the places in the world that market could have closed that day, that $4,000 product closed right on the line. Here it missed it by just a little bit, but way more than it statistically should. It closes on that line. So it's going to be our gravity to aim for if we do break below yesterday's low. All right, so with our base case argument that we hold the range today, the range would be yesterday's range, and it's a really big range. So that doesn't really help us out that much. Instead, we want to start laying out the pivot points within this zone. The zone being from the high of yesterday to the low of yesterday, which is a really big, it's a lot of area to cover. Focus on the institutional pivot points first. Our own Globex low, where we opened in the Globex, the pivot point from the floor pivot. Our Globex high, the ADR 1, or half the ADR. The low Globex of yesterday, the cash open, and then the high of the Globex from yesterday, and the full ADR. So 40.72, 40.54, 40.42, 40.20, a cog line at 40.11, pivot point 40.07, Globex opened at 39.87, and then Globex low 39.80. Yesterday's low 39.64. Those goalposts or benchmarks, signposts to each new level. Let me just a second. We have a frisky puppy this morning, barking and making noises. So use those levels as a signpost. You get there, you start to evaluate, okay, we got to this point, are we going to make it to the next one? What's the flows? What's going on in the other markets? Each one becomes, a part of the roadmap. All right, we got a 10-day, 30-minute volume profile. We're right in the middle of all this trash. So the 40-40, 40-50, there's some volume there. If we could get through the roundy at 4,000, it looks like we're going to get into a little bit of a shallow area. But it's a short-lived shallow area. So from 4,000 to just beyond the cog line, say right around 40.20, then we get right back into the trash. All of this is a really clear example of what we're going to have to fight through if we're to see this market begin to rally back up again. We don't have any point of controls that are untouched, no VPOCs until we get around that 42 zone. So nothing there to carry forward. You could carry forward the value area high and the value area low from yesterday because those aren't yet touched. But other than that, there's really not a lot to bring forward. The dollar has been impacting our market quite a bit. So even this move in the overnight hours, this fade to the downside, coincides exactly where the dollar was making that aggressive move to the upside. Then it started to consolidate, chop around. The market took that as a weight being lifted off of it, tried to buoy back up again. So we don't necessarily need the dollar to go down to help the market. We just need the dollar to quit going up to help the market. Oil had a liquidation break last night, significant move to the downside. Seems to have stabilized a little bit right now, but it's just a bit of a shock to see the dollar down, or the oil down around $88, $89. But this is a part of that capital rotation that we were just talking about. So continue to watch that. It made a big move in one direction. It could just as easily begin to reciprocate and start making a big move back in the other direction. Same thing with bonds. All right, so in the overnight hours, when this dollar began that move to the upside, oil dropped, bonds dropped, stocks dropped. Everything dropped except the dollar. Right? And oddly enough, Bitcoin didn't do anything. And gold dropped. It kind of just shines a light on how impactful that dollar is right now. So keep your eye on it, continue to monitor it, use it as an assistant. All right, so we talked about, maintaining the range. What if we were to break to the downside? Breaking to the downside, we're looking at 39.53. That'd be a half the ADR, and 39.20, that'd be a full ADR. Now remember, that downside move, that's not extreme. Hold on just a second, guys. All right, so that would not be an extreme move. That would be a measured move. We wouldn't even be getting into extreme yet. We would need to break beyond that. One of the things that we can do is add some measurements to that. So if we measure Globex, our own Globex high to our own Globex low, that gives us 39.59 and then 39.39. So it adds 2 more data points, 2 more targets to aim for. You could also bring in 39.69. We'll just round that up and say 39.70. So 39.70, 60, 53, and then 39. All right, so we got some movers and shakers this morning. These are the top weighed names in the NASDAQ. These 20 impact the NASDAQ more than all of the rest of the names in the NASDAQ combined. PayPal, Facebook, Netflix, NVIDIA, Tesla, those are all up this morning. So we've got the potential for a red to green setup. Right? The idea would be that we had a red day yesterday. And what we want to look for is a pre-market rally at least as high as the previous day's open. So I'm going to kind of zoom in here a little bit. Now, the red to green strategy doesn't say that it has to open higher than the previous day's open. That's kind of one of my own benchmarks. The idea is we closed it down here, and I want to see it rally in the pre-market at least that high, so that when we come into the open, if we're already above that level, and the market, of course, is gapped up at this point, markets want to close their gap. The first thing this thing is going to try to do is come down. I want to catch it when it finds support on the open of yesterday and run it to the upside. If we open and we're not yet at least that high, then we've got a market trying to come down to close the gap. Then it's going to run to the upside. Now it's got to try to get through that pivot point and then continue to go on. there is still another pivot point too, the high of yesterday. That's a little too extreme. Depending on how big of a candle we're looking at here, I don't mind being above the entire day. But if it's a really big candle, I don't want to try to run it to the upside after it's already run 4, 5, 6%, and then expect to catch it on a pullback for a continuation higher. Right? That'd be just too extreme. So my sweet spot is between the high of yesterday and the open of yesterday. This is called the R2G setup, red to green. It works better when you're already in an uptrend, or you've got other reasons to believe that the upward move fits the narrative, right? If it was 19 days in a row of sideways and negative days and choppy days and really nasty, and then we finally get a green day, a pre-market gap up, I wouldn't have any trust in that. Right? It'd just be one more red candle on top of 19 other days that we had red candles. It wouldn't be a lot of, anticipated follow through there. That kind of fits with what we're looking at here with PayPal. So it's a red to green, and right now it's up to 94.35 and it closed at 91.80. But this really doesn't inspire a bullish continuation, right? Same thing with Facebook. We are nearing those lows, looking for yet another bottom. We're up to 160 this morning, 160.70, 160.75. That's higher than yesterday's open. So Facebook here in the pre-market rallied from the close of yesterday and is now above the open of yesterday. This fits into the red to green narrative. And it fits into a bounce off of the lows, even though technically we didn't come all the way down and hit the lows. But we didn't come all the way down and hit the lows here either, or here. So it's worth watching, right? Now the thing is, when you get a red to green in something like the FANGs or the monsters of tech, you could get a red to green on 80% of the market at that point, right? Because a lot of market names are all going to correlate. So it doesn't become this, awesome thing when every single thing out there has the same setup. You're going to have to try to weed it down. If that's the case, rather than trying to look at, 40 different red to greens this morning, be very strict in your criteria. Maybe you're not doing options and you're only doing stock and you think Facebook is a little too pricey. Okay, find that same setup on something that isn't so expensive. Maybe you do want options. Find ones that have the better options liquidity or smaller strike widths or penny increments. All right, so we're looking at Netflix here. Same thing, red to green. It closed at 220 and it's already up to 224 and a half. So it hasn't made it through the open of yesterday, but it's working in the right direction. Microsoft is up to, hasn't changed at all, at least according to the bid ask. I guess so. Yeah, okay, we're up $2. We closed at 263 basically, and we're at 265 flat if we kind of split the bid and the ask there. But we're not up to my benchmark. Amazon's only up $1, not even $1, and a long ways away from the open of yesterday. Same thing with Google. It's got a long ways to go. And Apple's got a long ways to go. So Meta is already out. And PayPal is already out. The rest of these need to catch up. All right. Give us a little better view of what's going on. Got a possible trend line break on Amazon to add to that red to green. Same setup in Google. PayPal's already started breaking over. We get the start of an inverse head and shoulders there, but it's in the wrong spot. We'd want that head and shoulders along the lows, not sitting in the middle. Same setup in Apple that we had in PayPal and Google, and that makes sense, right? All the fangs are pretty much going to have the same setup. Again, we had a possible inverse head and shoulders yesterday, and if we were to measure that small little head and shoulders, it's very likely that it made it to its 50%. And that's all that it owed us, it's all that we got, and then it dumped down from there. You could argue also that that's a little minor head and shoulders inverted, and that it too may have only given that 50%, and that's all we're going to get. All right, so Meta. This is one of those red to greens that we were talking about. If we were to mark the open of yesterday, you can see how we're already above that cash open. Now what we want to do as we come into the open today, we want to see maybe a little bit of a rally up. I don't want to see that though. I'd rather see it try to close the gap, come to the downside, bounce on the open of yesterday, and then break out of yesterday's range. Right? So we're looking for an inside day breakout with an R2G setup. Right? That's the idea. That's the plan. And if you find it in one of the monsters, you're likely to start seeing it in the others as well. Now, if we step away from the heaviest names in the NASDAQ, sexy tech, basically, energy still getting that beat down. It's very likely going to continue since it's been doing really good and there's a lot of room to kind of sell off. I gave a shout out on, I think it was XOM. It might have been XOP. Let's jump over and take a peek. XOM short play trigger if we get below 97.42. The target was 94.50. And I mentioned, there's a little bit of a capital rotation out of there. And the caution still stands. If any kind of hurricane gets into the Gulf, we're very likely to see a spike to the upside hard and fast. So, just be a little bit cautious about that. Look at the top names that are down this morning. Chevron, ConocoPhillips, ExxonMobil, Lockheed Martin, Home Depot, McDonald's. So I noticed some financials there, Goldman Sachs being one of those. American Express, BlackRock, Bank of New York. Then we got a whole bunch that are basically flat, and we start getting into the positive side. They're all dominated by those tech names. I do see Disney moving around a little bit this morning. So Disney started to build that base yesterday, stabilized, had a little bit of a bump, got that retest, so we have the double bottom. This is a base that is not yet done, so it could just dump and continue to fall lower. But I would be looking for a trendline break, a TRB setup. Disney's primed for that, right? That's a really nice setup. Now we're on the hourly, right? So kind of think about how that would look if we stepped out into the higher time frame. We got Fed Miser is chipping his teeth this morning. And then ADP should have just hit the tape. Ford is another one that's up this morning. Not by much. Keep my eye on it. So we got a little divergence in the financials. Before I move off of this screen, take a look at the ticks, see if there's any divergence here. And there's not, but we wanted to at least look. All right, so on this grid, the top three generally work as a group, and the bottom three generally work as a group. So whatever Citi's doing, Goldman tends to do, Morgan Stanley tends to do. Whatever Bank of America does, Wells Fargo, JP Morgan, they tend to do that as well. All right, so I don't lump them in as, oh, well, all these six represent well in the XLF. So we can see the XLF ETF is up. We got a little bit of bump in JP Morgan, Bank of America. There's a print up there on Wells Fargo, but not any real volume up there. BlackRock's kind of muted. Morgan Stanley, Goldman Sachs, Citi. This isn't enough yet. Right? These are minor, and we really want to see that start to shine through. So keep your eye on financials. It's been finance and energy for me for most of my day trades this year. And, today's not looking to be much different than that. We're nowhere close to a red to green yet on these names, but, that could change as we get closer to the open. Yep, there's the ADP report. All right, so here's that tick. This is something I've been using more, looking for divergence between the higher time frame tick and the S&P. All right, so like back here when the S&P was setting higher highs, and we had that muted higher high in the ticks, it started dropping right about there, and the S&P kept rising. So we had a dominant divergence there. That's a bearish divergence. That tick started running back up right about here, showing a bullish divergence as if we were going to turn around and go to the upside, and that did not stick. So, there's no always to things, right? Right now, we're focused on what's going on closer to home in this time frame here. The ticks are still showing dominant downside movement, so it kind of implies that we're not done yet. It's just one data point. I wouldn't go out and trade only on that. Here we're looking at that rotation between consumer discretionary and consumer staple. Staple is the second part of that sentence, which means when this indicator is pointing down, staples are dominant. When the indicator is pointing up, consumer discretionary is dominant. Think soup versus movie theaters, right? You stay home and Netflix and chill, indicator headed to the downside. You go out to a nice dinner and go to the movies, indicators pointing to the upside. I call it frivolous spending versus household goods, but I've had people say, they kind of take offense to that. Whatever. Get over it. Eat some crayons or something. Put your helmet back on. On one side of that, it's defense. The other side of that is offense. So right now, defense is still in control. We're still pointing down, but it is starting to flatten out a little bit. One thing worth noting is that yellow line. That yellow line is a moving average, and we are above it. So, through 2022, we've been kind of moving to the downside. We stabilized, or we started to build a base in this thing. And then we had the July reversal, where we came across that moving average, and we're still above it. So, revisiting the lows is off the table unless we get below this moving average. Then that is back on the table, and we could see the S&P revisit those lows, those 38s. But until we get through there, I wouldn't bow up and get bearish too heavy, unless I'm aiming at a particular sector like energy. All right, it's pretty close to 8:30. I've been on here too long anyways. You guys have a good day. Be careful, be safe, and I will see you all in the afternoon when I come in for my live stream.